Welcome to another S&P 500 analysis. Today is March 27, 2021. The S&P 500 made another new record closing high and continues to defy all those market participants that have been calling and waiting for a market crash. In this video, after we have reviewed the S&P 500 price action, the market sentiment and the internals, we will look at where the bear market has been and where the S&P 500 could be headed. So stay tuned. Looking at this weekly chart of the S&P 500, we see it is still above this long-term megaphone channel, and it has surged more than 81% or over 1,700 points from the pandemic low back in March of 2020. For the week, it had a range of almost 125 points with a gain of 61.44 points or 1.57%. The weekly low is lower than the prior week, thus that put in a new one-time framing down, but the close is still above this rising 10-week moving average and also this 40-week moving average. Therefore, the weekly trend remains to be up. Let's take a look at this 15-minute intraday chart of the S&P 500 and the VIX. We see on the first 3 days of the week, it formed this head and shoulder pattern, and it broke the neckline toward the Wednesday close. And then on Thursday morning, we saw it made a low as the VIX spiked up to the 23.5 level. Then toward the close on Thursday, it came back up to this neckline. And then on Friday, we saw a follow through and also made a couple attempts to come down near the neckline and try to back test it. Then as it worked toward the close, we see this huge surge into the close on Friday, and the VIX came back down below this 20 level. Now let's go look at the daily sentiment and the internal before we go look at the price action of the indexes. On this sentiment chart, we notice that the VIX have been chopping around this 20 level here, and it closed the week at 18.86, and the put-call ratio came up to this 0.738, close to the 0.75 level. This could be a sign some market participant are putting on some hedges to protect a potential near-term pullback. The New York Stock Exchange up-down volume ratio went back positive from a low of -7 on Tuesday to a close of 1.69 at the end of the week. So in other words, it went from 7 times more down volume than up volume to more than 1.5 times more up volume than down volume on Friday. And the daily advanced decline also went from minus 1,921 on Tuesday to positive 1,996 on Friday. So it went from 1,921 more declining issue on Tuesday than advancing issue to 1,996 more advancing issue than the declining issue on Friday. And the NYSE new high, new low came back up to 161 more new high than new low, from a 142 more new low than new high on Tuesday. The New York Stock Exchange cumulative AD line also came up as the S&P 500 closed at a new closing high. Although the AD line did not make a new high, but the direction is in sync with the S&P 500. So we'll monitor for possible directional divergence next week for any sign of pullback. The Nasdaq market did not make a new closing high last week. It appeared that it is in a recovery mode and trying to establish a base. The up-down volume ratio did show some internal strength on Thursday as it was positive 2.4 on a day where the Nasdaq 100 closed down. But on Friday, the up-down volume ratio was only at 1.14 as the Nasdaq closed with a gain of almost 200 points or 1.55%. The daily advanced decline did show some internal strength on Thursday and on Friday. Both days have over more than 1,000 advancing issues than declining issues. The Nasdaq new high, new low came back positive with 32 more new high than new low on Friday. Early in the week, it was dominated by more new lows than new high. The Nasdaq cumulative advanced decline line is still showing signs of weakness. From the sentiment chart and the market internal, we are continuing to see weakness in the Nasdaq market as the reopening themes and the rotation away from the tech stock continues to play out. Now let's go take a look at the price action of the indexes. Starting with the daily S&P 500, we saw the price book below this trend line and dip down to test this 3870, and it came back in. And on Friday, it made a huge surge and move up to take out the prior all-time closing high at 3974.12. It closed the week at 3974.54. So in the coming week, we'll see on the upside to see would it be able to continue to move up and take out the 4,000 level and move toward the upper channel trend line near the 4,050. Then for the downside scenario is to come back and retest this 3870 and see would it be able to hold support there. If it doesn't hold support near the 3870, then the next level of support that we'll be watching will be this 3784. The Nasdaq 100 was able to regain this 12,786.92 level after it closed slightly below that on Thursday. So for the coming week, we'll see would it be able to continue to stay inside of this price zone and possibly get back up above this 13,280. If it is unable to stay inside of this zone here, then we'll be watching for a retest of this 12,439 and the 12,204 level. For the Russell 2000, we saw it came back into this price channel and came down and dipped below this 2195 area. It almost came down to this 2075 and it found some support above that. And right now, it is trying to make its way back up to see would it be able to regain this trend line here on the upper price channel. So for the coming week, we'll be watching for the price to see would it be able to get back above this price channel and make its way back up toward the closing high here, 2360.20. If it is unable to get back above this trend line, break above this price channel, then we are watching for a potential retest of the 2195 and see would it be able to hold support there. If it cannot find support at 2195, then we'll be watching for a possibility of moving back down to test this 2075 level. The Dow Jones Transportation made another all-time high and also closed with a record high on Friday. It broke above this previous all-time closing high of 14,242.67. It's been flirting with this level for quite a number of days. And on Thursday, it actually closed above that. And then on Friday, we saw this huge surge and move above the 14,500. So for the coming week, we'll be watching to see would it be able to make its way up to this upper trend line here on this price channel near the 15,000 area. And if it decides to pull back, then the first thing we'll be watching is for this gap fill, the gap between Friday and Thursday, and come down and test this 14,242. And if that doesn't hold, then we be watching for it to dip down to test for support here at this 13,656. The Dow Jones Industrial finally put in a new closing high as predicated by the Dow theory. On Friday, the closing high is what we call a confirmed high. Under my interpretation of the Dow theory, I expect to see another new closing high from the Dow Jones Industrial. So the upside scenario for the coming week is a continuation move toward the 33,500 level. And the downside scenario is for a pullback to this intermediate price channel and possibly backtest this area here, this 32,000 level for support and the lower intermediate trend line near the 31,668. Before we go and look at where the bear market has been, let's take a quick look at the S&P 500 ETF, the SPY. This is a 60-minute intraday chart of the S&P 500 ETF SPY. I have posted this chart on my Twitter stream throughout last week and also on my YouTube community channel. So as you can see, it formed a small head and shoulder pattern over here with a neckline of this composite point of control. And when it booked this neckline, it came down and tested this little high volume node here before it continued to move on down to this high volume zone that I put out to say watch for the price to come into this high volume zone, and then got a nice bounce and came back up above this neckline on Thursday. Then on Friday you can see the gap up and made a nice surge back up to this value area high, this composite value area high. So for the coming week, we'll be watching to see would it be able to continue to move up and take out the previous high and also close at least above the previous closing high. And also move above the 398 and possibly come up to this 400 level. Now for some of you, you might say, well, this kind of look weak because it did not close with a new closing high on Friday, like the cash index, the S&P 500. Well, let me remind you, previous week there was a ex-dividend on the SPY. So that will press the price down automatically by that ex-dividend amount. And that's why it distorts the price chart here on the S&P 500. And that is one of the primary reasons why I did not watch the SPY for the price action of the S&P 500. It's much better to watch the real thing, which is the cash index itself, the SPX. Now for the downside for next week, I'd be watching for this thing to come back down and possibly retest this point of control here near this 389 area and see would it be able to hold. If it doesn't hold, then I'd be looking for this thing to come back again to this 387.15 area, this high volume node here, and then see if that will get it a nice bounce back up. And if that doesn't provide a bounce, then I'm looking for this high volume zone to get retested once again. Now let's chat a bit about the bear market. I know many of you have been calling and waiting for this market to have a major correction so you could see it come down and pick up some bargain and so forth and so forth. Or just many of you, just like myself, feel this market is way overextended and it is overdue for correction. But the market doesn't care what we think or what we want or what we believe. The market will do what it will do. Now, if you were looking for a bear market, you would have found it in a lot of these highly hyped up EV stock. So let's take a look at some of those. Right now, I got the Tesla, and looking at the Tesla, measuring from the high, okay, to the recent low, you see there is a 40% correction here, been down 360 points. So by the definition of anything that is 20% or more, then that would consider as a bear market territory. So you can see that the Tesla has been in a bear market, and even if we take the high and just measure from the Friday's close, it's still down 31% or 281 points. So definitely Tesla has been in the bear market in the last month or so. Now the other one is NIO. So let's go and take a look at NIO. Likewise for NIO, if we take the high to the recent low, you can see that it also been down for 52% or 35 points. Right? So again, that's been in a bear market, and even on Friday's close, that is still down 46% or 30 plus points. Then the next one is XPen. XPen, same thing. We take the high, the recent high to the recent low, and you can see that it's been down for 66% or $49. So that is quite a large amount, and definitely that is in a bear market. And even on Friday's close, it was down, still down 56.85% or $42.35. And the last one that I want to show you is Li Auto. Right? Again, it's been down from the recent high of 58%, right? $27, almost $28. So that is definitely in the bear market territory. And even on the close, the Friday's close, it is still down over 50% or 24 points. And the next area is those stocks that have been benefited from the virus lockdown. So let's go and take a look at some of those stocks. The first one I want to show you is Square. So even though it has a nice trend up, but from the recent high to the recent low, you can see it's been down 32% or $91 and change. So again, that is also in a bear market territory. Even if we take a look at it on the standpoint from the Friday's close, it is still down over almost 25%. The other one is PayPal. Also PayPal from the recent high to the recent low, we see that's been down close to 28% or $86. And on Friday's close, it's still down nearly 22%. So again, this one, based on the definition of a bear market greater than 20%, then this is definitely in a bear market territory. And the other one is Peloton, right? Again, you look at from the recent high to the recent low, Peloton been down 45%, $77. And even on a Friday's close, it's still down nearly 38% or down close to $65. Now, then the other one is Roku. Roku, we look from the recent high to Friday's low, it's down almost 40% or $194, almost $194. So that is definitely in a bear market. And the other one is Netflix. And here for Netflix, from the recent high to the recent low, we see it down 17%. So it's not really in a bear market, but close to it. But as you can see, that also been down over $100. Although it came up a little bit on Friday to only down slightly above 14% or $84, $85 or so. Now then, there's the other one that I want to show you are some of those hyped up tech stock. The first one is Palantir. You can see from the recent high to the low, it's down 55%, close to $25. Even on a Friday's close, it's still down close to 50% or a little bit above $22. And the next one is Snowflake. From the recent high to the recent low, this stock is down almost 22%. I mean, down almost 52%, $224 or so. Even on a Friday's close, it's still down 45% or $194. And DoorDash, right, the recent IPO, and you can see from the high to the low, been down almost 53% or $135. And Airbnb, right, from the high to the recent low, and that is 26% or $58. Even on the basis on the Friday's close, it's still a little bit over 20% or $45.50. And the other one is Virgin Galactic. And this one here, you can see that's down close to 62% or $38.86, close to $39 from the recent high to the recent close. And last but not least is the Bitcoin or blockchain related stock. For example, Wyatt, from the recent high to the recent low, it's down nearly 57% or $45. Even on the closing basis, on Friday's closing basis, it's down almost 40% or $31. And the other one is Marathon Digital Holding. Again, this one from the recent high to the recent low is down 51%. And based on the Friday's close, it's still down 27% or so. All right, so those are the stocks that you would have been able to short it and play it as they are in bear market. So stop looking at the rotation and find something that is not there. The rotation and the reopening theme continue to be played out, and that's why you are seeing S&P 500 and the Dow index continue to push into new high territory. So finally, looking at this multiple index chart here, we see that the Dow Jones Transportation, the Dow Jones Industrial, and the S&P 500 continue to make new high and close at new high. And the NASDAQ is still a little bit of a distance away from its all-time closing high that was made back in February. And also the Russell 2000 is lagging a little bit, and the New York Stock Exchange Composite is getting close to the closing high, but it's not there yet. So I wouldn't be surprised to see this also come up and put in a closing high, a new closing high in the coming days and coming week. So in summary, the reopening theme and the rotation of the leadership continue to play out as the S&P 500 and the Dow are making new closing high. The large cap and overvalued tech stocks are still in a bear market territory. The sentiment and the New York Stock Exchange internal still favoring more upside for the S&P 500 and the Dow. The NASDAQ internal are still kind of spotty, so we're likely to continue to see the NASDAQ underperform as the excess in those overpriced tech stocks are being squeezed out. So if you are looking for a bear market, I would say you are probably a bit late on selling or shorting these tech stocks. And if you are waiting for a major market crash, I would say the market is telling you to be patient. It has not reached the top yet. Be sure to subscribe if you are not a subscriber to this channel, and smash that thumbs up to help me promote and share this video. Thank you for watching and stay safe.